Okay. So you lay emphasis on that, like entry and exit are very, very important. Be that you're a day trader, a swinger, or a long-term investor. We don't want to buy stocks or go into a particular trade at the wrong time. No, that will make us lose money and make us look bad as well. So moving on, we have two types of entry in the market. We have two types of entry in the market, but we have three types of trader, like three type of trader that take different types of entry. Don't get it mixed up. Like we have two types of two types of how we can enter a trade in the market, just two. But we have three type of people in markets, like they enter markets a trade in a different way. Let me come again. Two types of market entry. That's what we have. Type one and type two. But in form of a woman, we have three type of people. They enter market in a different way. Okay, moving on to um types of entry we have. We have the breakout entry, and we have the reversal. No, okay, let me first talk about the three types of human that trade forex and using three different types of entry. The first one is the breakout trader. The breakout trader looks for period of price consolidation, awaiting a breakout of a trend. Like, when a price is consolidating, a breakout trader won't pick any trade at that particular point. He will just relax, sipping his coffee, tea, or playing a game, anyone, whichever one. He or she will wait for a price to break out on a higher time frame and place his entry above or below the consolidation. That's what a breakout trader does. A breakout trader looks for a period of price consolidation, awaiting a breakout of the range in direction of high time frame trend. He places entry or order above the range or below in case he wants to short the price, so that when the price of the market successfully break out, it can be in the trade. That's the breakout trader. That's number one type of human that trade forex, that entered forex. The second one is we have the reversal trader. Alternative to the first one, which is the breakout trader, this works with price action method. It works with price action. It enter markets with price action. So that being said, rather than waiting for price to commit itself by moving in our direction as a breakout trader, like waiting maybe, oh, this will break out and go for a buy or go for a sell. But a reversal trader will enter a position in anticipating that this price is going up or is coming down without waiting for the price to break out of the consolidation zone. He will just have it at the back of his mind, like, oh, based on the price action and based on his knowledge, looking at the trend on high time frame and all, he just came to the conclusion that, okay, this price is going for a buy or is going for a sell. Then he enter. So let me read that this start to you. Entering the position in anticipation that this is the point price is going to reverse. Most trading systems use this entry method at key support or resistance level, as this provides divinable points that a price is likely to reverse. When we mark out our support level or resistance level, so a reversal trader always have it in mind, like once this price go to this resistance, this ceiling, it's surely going to drop. And a reversal trader will always, a reversal trader, once they are like, oh, once this thing goes to this resistance, it's surely dropping. Then once the price goes to resistance, they start buying without any further confirmation. But based on is a reversal trader, he has in mind, he believes so much in price action and trend. So once price got to support or resistance, it takes action without waiting for further confirmation. That's the second type of a trader that for the second type of woman that enter a trade. The last one, which is the third one, which comprises of both, is called hybrid trader. You know, we have the first one, we have the breakout trader, the reversal trader. This one is hybrid trader. It comprises of both breakouts and both reversal trader. It can do both together at the same time. Remember I said a breakout trader will always wait for price to break out of the consolidation area before he or she enter the trade, while a reversal will pick the trade while the price is consolidating based on the price action. But an hybrid trader will enter a trade when it's consolidating, and it will also enter the same trade when it breaks out of the consolidation. Okay, a hybrid trader is one who uses hybrid approach, one in which it can flip between the two entry types, leveraging multiple different trades as the market makes them available. A hybrid trader can buy in the consolidation market, can buy using the reversal trader type, can buy. And once it see like, oh, this thing is no more buying, it will come out of that trade. And once this the price break out of the consolidation and going for a sell, start selling as well. That's how hybrid trader works. It leverage on both movements. It leverage well on both movements. Am I communicating? If I'm communicating, put some fire on the chat box, please. I don't want to look like I'm talking to myself. If I'm communicating, I want to see some fire on the chat box. I'm checking the chat box now. If I'm communicating, I need to see some fire on the chat box, guys. Come on, come on, come on, come on, come on, guys. Come on, guys. Okay, okay. Yeah. So rather than waiting forever for market to present just the right condition and criteria for one type of entry, it systematically utilize both. A structure with two clearly defined touch point can make a reversal as the approach for the touches and blah blah blah. All these I'm trying to explain. I'll show you on the chart, but I'm just trying to give you heads up about what we are going to do tonight. So I'm just trying to give you heads up. So moving away from the types of women that pick different type of entry, now we're going to the main types of entry, which is just two. You can call them type 1 or type 2. The type 2 is the reversal entry. The type 2 is the reversal entry, and the type 1 is the breakout strategy. So I'm going to share my screen again now and discuss this on the chat. Just let me know if you can see my screen. Okay, guys, can you see my screen now? I need to know if you guys can see my screen. I just shared my screen again. Come on, guys. Okay, so I guess we're going to start with the type 1 type of market entry. The type 1 market of entry is when a price is consolidating, like I said, is when the price is consolidating and you're waiting for this thing to break out. So, we have different type of consolidation. For here, this is one example. This is example here. We have an impulse movement of a sell. Then we're having an ascending channel in form of consolidation and in form of giving us a further confirmation for more drop. So this is an ascending channel and the price is consolidating. This is a perfect example of the type 1 entry. A breakout entry trader will actually wait for price to break out of this zone of this consolidation before he or she picks the trade and start riding down. Let me make it more bold. Like I said, this is the type 1 breakout strategy. An impulse movement of a sell, then we have a consolidation, an ascending flag, ascending channel, which is also confirmation for more drop. So a type 1 trader, type 1 entry, which is the breakout strategy. If you're making use of this strategy, all you have to do is just wait for price to break out of this ascending channel, then you pick your entry, then you start writing it down. That's what type 1 entry looks like. So, but going for the type 2, which is the aggressive, we can also call it aggressive trader. It doesn't wait. Once he or she get the signal, the memo about the price action or where the market is going, he or she just enter. So basically, what a reversal, which is type 2 entry, usually looks out for in a consolidation area is 3 touches. Once it can get a 3 touches, maybe the market is going for a sell, and once it got a 3 touches at the upper trend line, that's the price action you needed. That's the confirmation you needed. Like, yo, this thing is going for a sell. I must be in this trade. Am I making sense, guys? So now, as a type 2 trader, we have an impulse. Now we're having a consolidation ascending channel. So a type 2 trader will wait for a touch here. Okay, a type 2 trader will wait for a touch. That's one. You wait for a second touch. That's two. And once it got this third touch here, once it got this third touch here, no matter what you tell a type 2 trader, which is a reversal or aggressive entry trader, no matter what you tell him, it's going to enter this trade. And from here, you can see the difference between type 1 and type 2. A type 1 will wait for price to break before it start riding down. But a type 2 we start the entry from here. So the difference between these two is the type 2 trader will make much more profit than the type 1 trader based on where he chooses his entry from. And there's also cons and pros in this entry. They both have their good and their bad sides. So, but for a type 2 trader, once he got this third touch and started seeing price action around this area as a form of rejection, you can see this long wick. Once the price gets to this place, then they start pushing the price down. The candle start retracing itself. So this is a type of thing a type 2 trader looks out for when picking a trade. Once it got something like this, then it's good to go. Then start riding down here. But a type 1 trader will wait for this breakout here before it starts selling. Another example here. Let me show you another example. I'm still on the same chart, but I'll show you another example again. This is another example again. I'm coming, sorry about that. This is another example again. After the breakout of this ascending channel, we have another impulse. Then we're having another consolidation ascending channel again. Secondly, again, a type 1 trader will wait for a breakout before it starts selling or she starts selling. This is the breakout, then start selling. Although right now, market is consolidating around here again after the drop. Market is still consolidating. As a type 2 trader, if he or she wants to enter this trade, we got the first touch, second touch, then third touch, start riding down. So that's type 1 and type 2 types of entry. So let's assume a type 1 trader met something like this, and if he or she wants to place the trade, all you just have to do is place it below the channel going for short. So you just have to place it around here you have to place it around here so to minimize risk. And I will tell you the reason. The reason being is that once price break out of a channel or a consolidation area, once price break out of that place, price normally will test trend line back or will test support or resistance. And once, if let's assume you make this place your entry now. I made this place my entry. This is my entry. Price come down here. So around this area, it got activated. Around this area, you can see it got activated. So price will do something like this. Market will do something like this. Once, remember it broke around this area like this. It broke this place and it come down. Before price come down here, it will have already retest back like this. And once it retest back like that, then we are going to have this. This retest will happen before price starts to drop here. And that's to be on the safer side. Now let's assume you now place your entry somewhere around here. No how, no matter how many pips you are risking, no how you are going to get caught up in this trade by the trade will definitely kick you out. Am I making sense? The trade will definitely kick you out because once price break out, it will surely do a retest of that place is coming from. And once you're picking your trade around this area, market will surely kick you out. So the best place for you to place your order if you are using the breakout entries around this place. Because once market breaks, before it gets here, it will have already retest that place, then it start dropping back. Then you're on the safe hand. That makes sense at all? Okay. So that's just a short example on how to place a trade using the breakout strategy. And as for the type 2, the aggressive trader, you don't need to place anything. You just have to monitor your charts. You don't have to place anything. And if you want to place then you have to be careful about placing a trade in a channel. You have to be careful about placing a trade, like setting your orders down in a channel. You have to very, very be careful about that. But the best thing is if you want to be using the type 2 entry, which is the reversal entry, you just have to be checking your charts from time to time. Once we get the price action, you see how the market is reacting around that area, then you just enter the trade straight up. So like as I was explaining the other time, this is another example here. You can see as a type 2 trader, which is aggressive, from here, you start selling. At least you will still be in a profit. Let's assume you start selling from here. So you still be in 31 pips. Start selling from here. But as a breakout entry trader, you start selling from here. That's 17. Okay, that's 25, 24 pips compared to 31 pips. So another example I want to make here is making this support and resistance. Because presently, price is consolidating. Presently, around this, the price is consolidating. This is the resistance. This is the support. You have two touch here already. You have one touch here already. So yeah, who can tell me as a type 1 trader, which is the breakout trader, what is the best thing to do here? Like, give me your answer on the chat box. What's the best thing to do here as a type 1 trader? You want to enter this trade. What are the things you're looking for? We already have two touch here. We have one touch here. So what are the best things you will do as a type 1 trader and as a breakout and as a type 2 trader, which is the reversal entry, the aggressive types of trader? When is best advised to enter this trade? Judging the fact that this market, this pair is consolidating at the moment, and judging by this ascending channel, we already have a confirmation for drop. They're fine, we had the drop, but currently this price is consolidating, moving sideways without giving us a particular direction. And who can tell me what to do on the chat box? Okay, wait for a test. Wait for a test. So in this case, so you have just to wait for breakouts of either side and retest, then you enter as a type 1 trader, which is the breakout. But as a reversal trader entry, so since we get the two touch here, we only have one here. The best thing for a reversal trader is to do is wait for third touch here. Once you have your third touch here at this resistance, without price breaking through the resistance, then you're good to go. to write it down. Then you're good to go to write it down. We already have our two touch here. 1, 2. That's double top. Give us this drop. Then we have one touch here. Presently, price action is taking place here. This candle is retracing. So, but as a reversal entry trader, if you want to enter this trade for yourself, you just have to wait for a third touch here, then write down. And again, the price might not come here instantly. The price might come down here. The price might come down here, give us double bottom before going up to give us the last touch, then write down. So that's that on today's class. Do you have any question? If you have any question, kindly drop it on the chat box for me. If you have question, drop it on the chat box. Let me see. Is there any question? I'm waiting to take your question, guys. Actually, it's very, very, very easy on how to pick a trade, how to choose your type of entry. You just have to pick what is best for you, what you think is best for you when it comes to picking a trade and all. You just have to choose the types that's best for you. Do we necessarily have to wait for third touches up and down individually? What if it breaks out before the touches are complete? Okay, now judging by this pair now, is giving us a signal right from here. It has been giving us a signal for a sell, and now price is currently consolidating. Price is currently consolidating. So what we have in mind is, okay, if you want to sell or you want to buy, your selling bias has to be much more than your buying bias based on all these confirmation and based on these two touches we already have here. So you have to make your selling bias, let's say 60 or 70, and make your buying bias 40. And concerning making three touch both sides, it's not necessarily you have three touch both sides. If you want to buy, if you want to sell rather, once you have three touch up, once you have one, two, and you have your third touch here, then you're good to go to start selling. Same thing as if you want to buy, once you have 1 year, 1 year, two, and you have the last 1 year, then you're good to go and start buying. So in this case, we already have 2 years, we have 1 year, and currently price action is taking place here. Both buyers and sellers, they are dragging for the right of, is it going for a buy, is it going for a sell? So if market opens, so you just have to sit back, relax, and watch what market will do. We don't force trade. You just have to follow what the market is giving you, is showing you. I'm fine. You might be thinking, okay, fine, I want to sell this thing, and the market will be giving you buy. If you don't have any choice, then rather to find your entry and buy as well. You follow the trend. Trend is your friend. You don't go against the trend. Do you get what I'm saying? If now fine, I have a belief, my bias is this particular pair is going for a sell this new week. But if market open and says otherwise, why am I to argue with the market? I just have to follow what the market is showing me. That's it. I just have to follow it. Fine, I already have two touch here. I'm waiting for third touch up. But if this thing decide like, oh, yo, after this third touch, it breaks the resistance, we test it and start going up. I don't have anything to do. I can't argue. I'll just find a way. I enter the trade and buy. Because that's what we do. We follow the trend. We don't like we all have our perception, our what we expect from market, but just have to do what market is doing. Yes, because market might decide like, oh, yo, I want to start buying, I want to start going for buy. We still have some levels up here that market can still try and come back to retest. We still have some levels like this. We still have some levels that market can decide we want to retest as a buy. But my bias 70% is a sell. And once I got this third touch here, or I get a kind of maybe a little channel here, then a little something like this. Let me choose a lower time frame. So maybe once I get something like flag here, and currently on a lower time frame, we are not getting an ascending channel. We are getting something like a descending channel. Let me show you guys. We are getting something like a descending channel. If you can see that, I have 10 minutes more on this call. So we are getting something like a descending channel here. You can see that. That gives you another confirmation like this thing is going for a buy to give us that third touch I'm talking about. And once that third touch is complete here at this resistance and it got rejected, wait for price action. That's when your type 2 entry came in as a reversal trader. Then you start buying, you start selling rather. So this is a little confirmation, a descending channel, which is a bullish flag as well for buy to this level here. And from this level, once you see the third touch and price action take place, then you can start selling. I've answered your question there. Okay, guys. In the absence of no more questions, in the absence of no more questions, then we have to end today's call here. We have to end this today's call here. So thanks for tuning in tonight. You all have a wonderful night rest. Till next week, guys. Stay safe, stay at home, stay safe. God bless.